Let me bring on board Tirthankar Patnaik. He's Director and Strategist with Institutional Research Business of Religare Capital Markets. Tirthankar, fantastic to have you back on ET Now. Thank you for joining us. 3 days, 5% up. The sentiment has taken a 180-degree turn. What's going on?
I think, at 5,600 odd levels, the markets, were seeming attractive to a lot of investors. So we've had a fresh bout of buying coming in. We've also seen the government sort of kick in our framework, where we talk about a hope trade for India, which is what the government is supposed to do, and a favorable global backdrop, which is essentially what is the liquidity available in the global markets. The first leg has sort of kicked in as the rupee went to 60. The government took some hard policy decisions. Gas prices have been raised. Before that, petrol was raised, and overnight diesel has also been hiked. So there has been a little bit of policy induced positiveness in the Indian markets. You had large index heavyweight Reliance move up over the last couple of trading sessions, so that has also sort of been a good picture. The third reason is monsoon has been very positive, and after the Uttarakhand floods, it's time to take a call that this year's Kharif crop is likely to get fairly good this year because of the adequate amount of rainfall that's come in. The Agri Ministry has said that rice cultivation has gone up by rice net sown area has gone up by about 31%. So a couple of decent news has boosted market sentiments.
Tirthankar, hi, morning. It sure has, especially the one space which looks very active has been oil and gas. The gas price hike, the petrol price hike, as well as the diesel price hike overnight yesterday. What's the take, and how does one approach the oil and gas pack now?
See, we have been pushing ONGC as the best play on government reforms. We've been also saying that despite all the hiccups that one might see, particular ones that clients essentially raise is that there are 4 elections that are coming up. We have been pointing that diesel prices will be raised, and which is what the government is essentially doing. What has not really helped there is that the rupee depreciation has meant, and diesel crack spreads essentially going to about $20 per barrel now, has meant that under recoveries have remained at around 8 rupees per litre. So in that scenario, the government taking hard decisions is definitely a good sign. So we will maintain our positive stance on ONGC. We'll push it all the way till about 360, 370. At which point we'll ask clients to take profits. Reliance is the other big heavyweight which has started moving. The key call in our opinion there is the company likely to raise its guidance for gas production in KGD6. We have not changed our numbers. While the realization now will be better from FY15 onwards, we will still wait for Reliance to raise its guidance. So our numbers are about 13 to 15 MMSCFD right now.
Tirthankar, what is the deal with RCom? The company is still saddled with a debt of about $6 billion. They have a huge outstanding FCCB liability, and weakness in Indian rupee will only make life miserable for them. But stock yesterday appreciated by about 10%. In last 3 months, it has appreciated by about 50%. In last 1 year, it has appreciated by about 100%.
See, we don't cover the stock, so I won't be able to comment on RCom specifically. I think what is definitely happening on the rupee should be a dampener. But let's recall that most of the leverage of RCom is with Chinese banks, wherein the currency movement has not been so sharp. And plus, all kinds of the deal with Reliance Industries has been a big push for RCom. The company is expected by the markets to get much needed capital that should help it tide over the current difficulties that it has sort of found itself in over the last 12 months or so especially. So no specific comments there, but if you want in the telecom space, we continue to prefer idea from a top-down perspective.
Tirthankar, auto companies are struggling. Competition only has intensified. Sales are slowing down. But auto stocks are holding on. What is driving auto stocks? Optimism or just hot air?
Auto stocks generally, if you see, there are various reasons why auto stocks are moving up. Maruti has moved up thanks to the yen depreciating again from about 95 odd levels to nearly 100. That's the call for Maruti. Tamo, Tata Motors has been a favorite of investors, although it's not done well in the recent sessions, largely because what's happening on the JLR side. And Mahindra and Mahindra, you saw the tractors numbers yesterday. I mean, they have been excellent. They essentially have continued what was seen in the previous months also. So while overall auto numbers have not been good, Mahindra's tractor numbers are fairly good, partly because of a very, very low base, but also because now and the rural economy is likely to do fairly better. So auto stocks are in favor really, but again, due to various reasons.
Tirthankar, as a house, how excited are you about this new bank license opportunity? Do you think in the near term, some of the banks or some of the companies which will get a bank license, they actually will destroy capital and they only will create value after 5 or 7 years?
See, in the near term, adhering to the RBI's norms of CRR, SLR should see ROEs basically dip for all NBFCs which apply for bank licenses. The call is essentially long term, where they will have access to low cost capital. So, in the near term, of course, one would see valuations also basically track what's happening with the ROEs. So yeah, in the near term there will be some amount of pain, but one has to take a step back here. One has to look beyond just the particular stocks that are affected by whether they are applied for banks or not. The way we are looking at it from a top-down strategic perspective is the government, is the RBI, are they going to meet their goals of financial inclusion? After 40 years of bank nationalization, 44 years, we still have nearly 40-45% of the population outside the banking ambit. So that is essentially the key call behind the government and the RBI raising the number of banks in this country. It's not as if deposit growth is something to write home about at this point anyway, where one needs more banks. So we will, from a top-down perspective, wear our economist's hat and then look at the wider picture there and see which of these 26 entrants can really provide that kind of financial inclusion that's sort of missing thus far really.
So Tirthankar, if a client walks up to you and if his query is, I have a large exposure to IDFC. IDFC in principle has indicated that they want to apply for a bank license. If they get a bank license, their balance sheet will change, the business dynamics will change. What should I do?
So if he's a long-term investor, I will advise him to stay invested. Clearly, IDFC has shown the wherewithal to manage, finances in a fairly exemplary way over the last couple of many years. So this will be one stock that I will be, definitely keeping on my radar. Yes, near term there is pain, but I think, the market will sort of factor that in as well. So I will advise him to, remain invested.
What's your take on IT? We've got the earnings up next, and of course we've seen the currency now strengthen somewhat after hitting that 60-85 odd mark, and then of course you have repercussions of the immigration bill as well.
So Aisha, we have maintained that this year should be a dollar portfolio in dollar weighted portfolio. Accordingly, IT and pharma are overweights in our model portfolio. For specific stocks, the way we are playing it is we are playing recovery on Infi, we are playing good execution through TCS, and then we are playing TechM as a secular story. After the merger happens, we still see another 10 to 15% up move on that counter. So in the near term, when the results are coming, probably there will be a sufficient amount of volatility. Infi might, give us a better entry point, but we will be biased from a long-term perspective in Infi at this point.
Tirthankar, I'm going to get your views in on Apollo Tyres, because we've seen significant amount of market cap erosion ever since the deal. Do you believe in the fundamental story, and do you think then, if that be the case, it's a good entry point, or do you think some more correction and one could buy into the stock?
See, specifically, not to comment on Apollo, what we have been hearing from clients is that the acquisition has been a bit too big for the company, not something that the company will be independently able to manage. And the cues that we have been hearing is that the stock will provide better entry points even at these levels. So remain cautious about Apollo Tyres really.
Tirthankar, consumer names are expensive, but every time markets correct, they fall the least, and every time markets recover, they're the first ones to recover. Let me give you some prices. United Spirits yesterday appreciated by 300 rupees. Nestle added 250 rupees. Glaxo Consumer, arguably the most expensive consumer stock, or one of the most expensive consumer stock in the world, yesterday added about 210 rupees. TTK Prestige 157, Asian Paint 76. Do you think one must recognize that these consumer stocks are expensive, but markets in the near term are likely to pay a quality premium, and these stocks are unlikely to correct?
Nikun, the way we see the market is, beyond the framework of hope trade and global, favorable global backdrop. We see a very weak macro. We see an investment cycle not really happening, but we also see inherent growth. We see favorable demographics from a long-term perspective, and that to us translates into a situation where defensives are likely to outperform. And again, players where foreign investors remain the large players who play into India now for essentially the consumption story and not the investment story. It's not likely to pan out anytime soon. So in that scenario, consumption stocks are the favorites of foreign investors, and which is what explains their their appeal. So we see the market remaining in a range bound scene over the next until we see clarity on the macro, and in that scenario, until the investment cycle really revives, and we don't see that happening in FY14 at least, or at least we get very good tidings from election or clarity of that sort, we will see consumption stories doing well. The call is, should we be putting fresh money into them, or should we be holding on? Our call has been that we will be holding on to consumer companies. So if you see HUVR and ITC, we remain neutral. There are expensive stocks. GSK Consumer has done fairly well, but if you see over the last 2-3 weeks and all, the stock had a stupendous fall. It fell nearly about 20%. So valuations are rich for some packs, in some stocks in the consumer pack. What we like at these levels are Britannia, we like Dabur, and we also like Bata. So we would play valuations in some of the consumer names. Granted, they are quality, they are defensives, they depreciate the least, and they do offer protection to investors. So what we are saying is hold on to the consumer story, but do not be putting fresh money unless you're very selective.